Hello and welcome to today's video where we'll be discussing the 3 key takeaways from Benjamin Graham's book, The Intelligent Investor. The Intelligent Investor, written by Benjamin Graham, is widely regarded as the Bible of value investing. In this book, Graham lays out his investment philosophy and provides practical advice on how to minimize losses and maximize returns. In this video, we will focus on how to minimize losses in the stock market, how to maximize chances of sustainable gains, and how to control self-defeating behavior that keeps most investors from reaching their full potential. Let's start with Lesson 1. Graham's book discusses the difference between investing and speculation. Graham defines investment as an activity conducted through fundamental analysis of companies, where investors deliberately seek to protect themselves from serious losses, and they are looking for adequate returns as opposed to extraordinary performance. Any operation that does not meet these 3 requirements is deemed speculative. Modern examples of Graham's speculative activities include cryptocurrencies, non-fungible tokens, NFTs, virtual real estate, and some AI-related stuff that most people don't understand. Let's look at Lesson 2. According to Graham, inflation is the phenomenon in which the value of money decreases over time. In other words, a dollar or rupee today is worth less than a dollar or rupee tomorrow. He refers to this as the money illusion, the tendency of people to believe that their money has maintained its value despite the erosion of its purchasing power. Let's look at Lesson 3. According to Graham, there are 2 types of investors: defensive and enterprising. A defensive investor is someone who has a long-term portfolio, doesn't have the time to research and analyze companies, and prefers to put their investing on autopilot. In contrast, an enterprising investor is someone who actively researches and analyzes companies and takes a more active role in managing their investments. There are 4 steps to this that he puts forth in his book. Step 1. Decide on your stocks versus bonds split like a 50-50, 60-40, etc., which will depend on your life situation, goals, etc. Graham was talking about asset allocation way back in the 1940s. Step 2. Restore this allocation once or twice a year, which means if the value of stocks suddenly becomes 70% of your portfolio, and you are comfortable with the 60-40, then restore the parity by selling some stocks and buying bonds instead. This is classical rebalancing, which is something that very few investors do in a disciplined manner, even today. Step 3. Invest a fixed amount of capital at regular intervals, which is something a lot more people do today, as evident from the growing SIP book in our country. Step 4. On stock picking, a defensive investor should follow these 8 rules of investing, which ranges from diversification to size of the company, the current ratio, profitability, growth, companies whose price is within range of its net asset value, and of course, a PE ratio, which is not higher than 15. While the defensive investor is happy with average returns, the enterprising investor is someone who's trying to beat the market by researching and analyzing companies. Yes, it requires patience, discipline, and eagerness to learn, and of course, a lot more time. Benjamin Graham isn't wrong when he says in his book that most investors aren't suited for this kind of setup. Truth be told, Graham painted a slightly negative picture of active investing and generally wanted us to avoid things like day trading, foreign bonds, IPOs, and growth stocks. However, if you embrace the principles of systematic investing, asset allocation, and rebalancing, and adding a layer of ETFs or index funds, then it is my belief that a defensive investor is good to go. That's all for today's video on the 3 key takeaways from Benjamin Graham's book, The Intelligent Investor. Thank you for watching our video. If you enjoyed this content, make sure to hit the like button and subscribe to our channel for more videos on life-changing book summary. See you in the next